excited to keep the conversation going. So let's get into it. One of the reasons that I got motivated in putting this topic together and all of us coming together is that in the last few weeks, as everyone knows, there's a pandemic going on. And there's a lot of conversation around finances, business decisions, the stock market, et cetera. And it's pretty scary how there's a misunderstanding or a miscommunication of information that really goes around very quickly. And what I really wanted to do is take advantage of the relationships that I've been able to build over the years and the opportunities that I have to have friendships with these gentlemen to make sure that you guys are hearing directly from them what is really happening in the accounting world, what's happening in the banking world, what's happening in the investment world, and what are the concerns of consumers and what's really happening behind the scenes as they also adjust very quickly to situations that they're just trying to adapt to very quickly as well for us as consumers. So I'll get into it very quickly with Abel. Perfect timing to talk to us a little bit about the banking world, right? I think this conversation happens a lot. There's some inconsistency of what's really happening in your world. I think there's also inconsistency in the communication from different banks. Who's doing what, what's available, what applications are being taken. Talk to us a little bit about that and what's the right approach to going to your bank, speaking to your banker and coming with a prepared file.
Thank you, Carl. As you guys know, the goal today is to help everyone in our community. So I am assuming that the PPP loan is going to elicit the higher amount of questions. So I had another point that I wanted to bring in today. So if you guys don't mind, I would rather go into that one first before I touch on the PPP. And I think it's going to be a very interesting thing because it's about forbearances and the ability to defer your mortgage payments or a certain amount of loans and whatnot. So I want to share my screen here with you guys, and I want to talk to you about some of the options that you have. So forbearance. Forbearance is the ability, it's a contract that you enter with your bank or a mortgage servicer in order to defer your loan payments. It's been used before during emergencies, during 9/11, during the hurricane. This, of course, is a novel and new situation that we haven't seen before. And I don't know exactly, it's an evolving, living thing right now. But based on the experience of years before, I want to tell you, give you a couple of examples of what it is. There's a couple of things that you have to take into account and be aware of. How's your payment? And I'm going to talk about two different products. This is the most common out there, which is a regular mortgage and a HELOC, or line of credit that people obtain on the equities in their properties. So your payments in this type of loans are usually interest and principal or interest and principal on escrow. Things that you need to keep in mind. How long have you had your loan? And I'm going to touch on why it's very important. It's not only what kind of contract you're going to get from your bank, but how your particular and unique condition of your loan, the type of loan, and how long you've been into it. And then what happens next. And the same thing's going to happen with your HELOC. Most HELOCs are going to have a payment of either interest only or interest in principal. So it's a very, very similar process. So what options do you have? Well, there's a lot of options, and I have a link from the CFPB, and that's the government agency that regulates how this process works. And I'm going to share at the end of the presentation. And it basically tells you there's a wide range of options from the bank. The most important thing is keep communication with your servicer. And there's a few things to consider. Right now, there's a moratorium and foreclosure processes in all federally backed loans. So if your loan is a federally backed loan from Fannie Mae or Freddie Mae, there's something that you don't have to really worry so much about now because you're protected by the federal government. There's no foreclosure going on right now if your loan is federally backed. Another thing, how long ago do you buy your house and why? Because in forbearances, you're typically going to be able to defer your payment in two different ways. And that's going to depend on what's in your agreement. I want to tell you something before I explain to you how those different options are going to work. And this is the question, can I pay? And the answer to this question is, if you can pay, pay. Forbearance is not a vacation from a contract that you sign into. It's designed to help the people that actually need it. So if someone takes advantage of it well, they can pay. Not only they're affecting the bank, but they're affecting the ability of other people to obtain the same thing. Because if everyone asks at the same time, and it just doesn't work. It's just like an insurance. It's based on the good faith of everyone that's using it in the pool. So it's very important that you keep that in mind. So it's not a dirty word in any way whatsoever. If you do it the right way, it should not affect your credit or your relationship with your lender. Everyone understands that there's a situation. So the most important part is to review your agreement. Your agreement is going to tell you what the terms of your forbearances are. And ask your services about late fees and credit reporting. Most financial institutions have announced that they won't, for the period right now, they won't be charging late fees for late payments, and they won't report to the credit bureaus for your first 30-day incident. So you have a certain amount of time that while you can figure out other things that are more of an emergency, and before you decide what you're going to do. 3, and this is to dispel a myth that is out there, not all forbearances are a 90-day balloon. And what does that mean? Not in all cases you're going to be required to pay everything that you defer at once at the end of the period. That is an option. Let's be clear about that. That is an option. That could be the case. But that doesn't mean that all forbearances are meant to be that way. Just think about it logically, without thinking about any banks or any of what you heard in the media. If everyone does this and then everybody else has to pay in 3 months, that we don't even know if we'll be working yet, to the point that one of the speakers was making earlier, we don't know what's going to happen. So in 90 days, everyone's due, and we start foreclosures on every single property owner in America that asks for forbearance, then that wouldn't work. It would be an avalanche of foreclosures, and the entire mortgage industry will go belly up. That's just not an option. That's just not the way it's going to work. Each situation is unique. It's the most important part is communication between the servicer and the individual or the bank, and understand what your options are, and then follow your regulations and stay informed. And a couple things that I wanted to mention: if you have student loans right now, there's a moratorium on all federally backed student loans. The interest is being forgiven and the principal deferred. So that's something very important to keep in mind. So if you have any questions about forbearance, I guess we can touch on it a little bit later. There's options where you can put in your principal at the end of the loan. It's very complex. There's a wide range of different ways that it can work. So if you have questions at the end, please go ahead and we can touch on them individually. I don't want to extend myself for too long. I also wanted to mention that I'll be sharing also an article from Forbes magazine at the end of the presentation that has the best so far schedule and timeline for the way the stimulus checks are going to be received, and it touches on all the different demographics and people that don't file taxes, just like Julian mentioned before. That's going to be at the end as well. So let's go ahead and talk about the PPP. Let me get out of the screen here. So the PPP is the Payroll Protection Program. I'm going to give you some of the highlights. I've been doing some of them. It's a term of 2 years. Your interest rate is about 1%. Actually, it's exactly 1%, not about 1%. I'm sorry about that. It's there's no collateral, and like Julian mentioned, part of the loan may be forgiven. It's designed to keep people employed. There's also a wide range of businesses that can apply. As of right now, the guidance that we have is that W-2 employees are the only ones that qualify. 1099 subcontractors, self-employed individuals are allowed to apply on their own. There's going to be something coming up soon in regards to that. But for a company, for a small business, all your W-2 employees are eligible. You can ask for 2.5 times, like Julian mentioned before. It's a 250% of your payroll average for the month. There's a couple ways to calculate that, and again, if somebody asks a particular questions, we can get into details, because if your business has seasonal employees, it's calculated differently than regular employees. But the point, the gist of it is, everyone that has a W-2 qualifies. The requirement is that you use 75% or up to 75% of that for strictly payroll. The other 25% can be used for a range of different areas, for example, like rent, utilities, health insurance benefits, mortgage interest, or debt and interest. Again, for each business is going to be unique depending on their needs. It's important to understand that it's a regular loan, and the forgiveness is subject to rules. And if you don't meet the rules, then the loan will not be forgiven. They're very clear in the agreement. I'm going to be sharing also a link at the end of the presentation for the SBA website. And there you can see all the options that you have. It's important to understand there's several options for everyone there. Let me go ahead and share the screen again with you guys. So this is the article for Forbes that I was telling you about. And then this will be your SCFPB website where you can see everything that has to do with foreclosure. I'm going to be sharing that link. And then we get to the coronavirus with the SBA. Okay, so this is what they have going on right now. The first two you see to your right, the SBA Express Bridge Loans and the SBA Debt Relief, those two are for companies or businesses that already have an existing relationship with the SBA. You can click on the link where it says learn more, and it explains to you what options do you have in there. The bridge loan that I mentioned, it's not this one. That one's by the state of Florida, so there's two different options. Some people will qualify for both of them, some people for either or. So you can get information on the Florida one, and then this one's a different one, but they work pretty much the same. They all meant to get you to the final one, which will be the PPP. So I know the next one that you see here is the idle loan advance. It's important to understand how this one works. This is a regular loan. However, there's a provision on the PPP that allows you to include this $10,000 advance in order to be paid off and make it forgivable. I'm sorry. How does that work? You took your $10,000 advance and you use it in your business to keep your business afloat. Once you're approved for the PPP, whatever loan amount that you have based on 250% of your payroll, you can add 10,000 to that to use that money to pay this advance, and you no longer owe that advance. So that's something important to keep in mind when you apply for the PPP, and we can get in details from that. One thing to keep in mind as well, if you get approved for the PPP, you are no longer eligible to ask for this advance for the purposes of payroll. You can still ask for it for some other things, but not for payroll anymore, because you already use it for that. So that's very important that you keep that in mind. So going back to the PPP, like I said, the loan may be forgiven. You have to do your payroll costs, and you're allowed for certain things. A couple things that I've heard out there, there's a little bit of confusion with businesses that employees that make over 100,000 do not count. What happens is that they're capped at 100,000. They do count towards your average, but you only count their payroll up to 100. Whatever they make over 100 is not eligible for the program. Something to keep in mind. And any employees whose main principal place of residence is outside of the United States, also they do not count. They have to be residing in the United States. That's not very common, but it could present a problem for some businesses. It's a very good program. There's a huge volume. One thing that as a banker, I would ask for all business owners is to make sure that they're patient because everyone's working really hard. And the fact of the matter is that the SBA does about $23 billion or so in loans in a year, and we're trying to do 350 billion. So that's really tough. But we're gonna get it done. So that's it for me, Carl. I'm gonna step out and let you get going.
So with that, stay safe, stay positive, stay focused, take care of those beautiful families of yours, and let's continue leaving a positive impact in our world.
Guys.